So this happens to the best of us. We get caught up in economic news and assumptions about where the market is going. However, we keep wondering, what's the best investment strategy in today's market? Once you decide you're going to invest in a real estate syndication deal, and you get the understanding about risks, rates of return, and how real estate syndications work, your concerns naturally move toward what investment strategy is best or right for you. The most important thing is that you know what the two main strategies are and why each is important. The two most common and most widely discussed investment strategies are number 1, gains strategy, and number 2, cash flow strategy. Both strategies are essential to the bigger picture, and you need to be informed about each one and how it might affect your financial situation in order to plan ahead appropriately. First, let's talk about the gains strategy. A gains-focused investment is based on buying low and selling high, creating a gap of profit or gain between the two transactions. Some great examples of this in residential properties are foreclosures and fix and flips. In real estate syndication properties, the business plan may give you some details, such as buying an undervalued property at a low-cost basis, executing light or big renovations, and selling at a much higher market price. This may or may not be a quick turnaround deal, and the cash flow might be on the lighter side or delayed. The caveat to pursuing gains only is that you have to know the asset's actual value and the market trajectory. Now, this is very important. The gains strategy also requires that you have a separate income to support your lifestyle and the asset throughout the time you own it. Assuming the property isn't providing you any monthly income, you still have your own personal bills and any repairs that come up before you sell. A narrow focus on investing for gains comes with an increased business risk, since you must be prepared to hold and sustain the asset through market dips without any returns from the investment until you can sell for your desired gains. On the other hand, in cash flow focused strategies, you buy and hold for a long period of time with expectation of constant distributions month after month, or every 3 months in the case of syndications. Rental properties with existing tenants are great examples. There might be some natural appreciation in the deal, but the most attractive quality highlighted in the business plan is the predictable returns. Planning only for cash flow is about consistent monthly or quarterly distributions over the long term. It's not about trying to time the market, buy low, or create a big spread. In an ideal cash flowing investment, there's enough distributed each month to cover property costs like mortgage and insurance, plus renovations or repairs needed, and still have some profit left. In cash flowing properties, you always have to assess sustainability over the long term, meaning how sustainable is the profit each month? If you've got $100 after the mortgage and insurance is paid, the property is cash flowing $100. But what happens when you have to replace the hot water heater for $1,000? That means for 10 months you have $0 in profit. You have to assess if the profit made after expenses each month is really sustainable and if the investment property will still be profitable if you have a repair or two. So why not both? The good news is that you can pick both. You can earn steady passive cash flow and enjoy the wealth building power of appreciation by pursuing real estate syndications that have both benefits at the same time. Here at Nima Equity, we believe one of the best ways to build wealth and freedom simultaneously is to invest in real estate syndications with cash flow and appreciation built into each deal. And that's what we call value-add deals. If you're interested in learning more about real estate syndications and how they can help you achieve financial freedom and live the life you've always wanted, join the Nima Equity Doctors Investing Club today. You will find the link down below in the description. And finally, if you like this video, hit that like button below, share with a friend or a colleague, and be sure to subscribe. I'm Harry Nima Segara with Nima Equity. Hope to see you here next week.